Welcome to the Live Big podcast, where real estate expert Nick Paynes shows you that everyone can build wealth through real estate investing. Nick and his featured guests will give you the tools, resources, and expert information you need to leverage real estate into a wealth-building strategy, so you can stop worrying about your 9-to-5 and start to live big. Here's Nick with today's episode.
Hey, everybody. Welcome back to the Live Big podcast. I am here today with Clayton Shearer. He is a financial planner, managing partner of Strategic Partners Financial. Is it Group? Financial Group?
Financial Group.
Okay,
correct, yeah.
Cool. And I'm excited to have him on today because we think about a lot of the same things. We're always thinking about money, finances, and how we can get ourselves to a place where we don't have to work day in and day out. And so I imagine that's what you're doing with a lot of people on a daily basis, and your team's doing on a daily basis. And so anyway, welcome. Cheers.
Cheers. Absolutely. Thanks for having me on, Nick.
Thanks for coming. Appreciate it. Why don't you start off, tell us a little bit about yourself, like how you got into what you're doing, and maybe kind of what your day looks like, and what the type of people that you're working with.
Sure. So kind of an interesting story of how I got into this is a fun one that I was in ninth grade, and I took a stock after school class. It was one of those simulation things, and absolutely loved it. It was the coolest thing ever. But I also grew up on a farm, and my dad had a landscape business. And so I dug holes for ever since I can remember. I pulled weeds ever since I can remember. And I was like, I don't want to do that at all. There's got to be an easier way to make money. So I did the stock simulation class, thought it was absolutely wonderful. And then that next week or a couple weeks within that time frame, we had to do a job shadow of somebody. I happened to go job shadow our financial advisor. And I was like, wait, you get to sit down and talk to people all day long? Yeah. I'm like, you don't have to be outside in the heat? Nope. You don't have to dig holes? Nope.
That's great.
Wait a second. There's a way to make money without hard work?
Right.
And that was the day it dawned on me really quick. It's like, I can use my mind and be very efficient with that and still make a living.
Right.
Like I'm all in.
Where was this, by the way?
Manhattan, Kansas.
Okay.
So like hot and humid, 110 degrees in the summertime with 80% humidity. Not fun. That was right then on there. I changed and I took any and every single business class I possibly could. And I said, I'm going to be a financial advisor. Not really even knowing a whole lot what that meant, but I was down that track from that day on, ninth grade, which is pretty cool.
That is cool.
So
you kind of knew early on, like that's what you were going to do.
Mm-hmm.
It's kind of interesting. I want to follow up with that little story of mine. So before I got into real estate, when I left my prior career, and I think we talked about this, Clayton and I went on a little golf trip together a couple weeks ago, and we were chatting about this. But I went and when I was moving out of my last career path, it was like I was going to either be a financial planner or go into real estate.
Yep. And
I hate school.
Yeah. And
I was like, I looked at what schooling you needed to be a financial planner and what schooling you need to be in real estate. Yeah. And I was like, I'm going to do real estate, but looking at my background and what I had enjoyed doing, what I had enjoyed studying, finances was always something I really loved. I loved the stock market. I loved, I taught myself how to trade options and like just everything with the stock market. I tried to learn how to do, and I probably could have learned better than trying to teach myself, but I just loved it. And I was like, that's what I'm going to do. That's what I'm going to do. And then I was like, ooh, I'm going to have to take like a Series 7 or
take some exams.
Oh no, I'm good. And so anyway, ended up in the real estate world, which is, I had a background in that too with the investment properties, but kind of funny. So, so what, in general, like what is like a normal day for you look like? I mean, is that like the job shadowing that you had? Mm-hmm. Is that what you're sitting down talking to people? So what is financial planning?
Right. So I think let's step back 1 second here on the financial planning aspect of it, and build a foundation from what that looks like, so our listeners and watchers have an idea, because there's a lot of misconceptions. I know we kind of talked about that. That's some of our goal today of what a financial planner is and or does. But I think the foundation of the difference is like who you're working with and where they're located, and kind of the structure of that individual makes a big difference, and kind of what you're going to receive as a kind of relationship, and also an experience of working with somebody. And there's no right or wrong answer in the industry. It's just kind of where do you fit as a consumer in the appropriate place. So as I say that, I really kind of take the industry and break it into two different categories. One is the more independent side. And all we mean when we say independent is we don't have a name of a big firm associated with us that has any products or services that is proprietary. So meaning there's nothing with our company's name on it. We don't have a product. We don't have a service that we sell. So there's no incentive for that area there. And then we have the captive side. So captive would be, the company's name is on the outside of the building. They have products that individual happens to work for. And the reason I say that is because the fact that it's not bad that they use their own products, but they also are limited to using their own products.
Right.
So can there be some conflicts of interest in that scenario? And I'd say, yes, there can. I know a ton of advisors that are my friends that work for captive companies, and they are wonderful advisors and they take care of their clients really, really well. So it's not good or bad or evil and not,
True.
right? So I like to start there. Where we're on the independent side, just because I was on the other side and for how I wanted to grow my company and what I wanted to create and have clients have access to, I couldn't have a box. I needed to be free to really be creative in what I wanted to do and how I wanted to do it. So that's the big reason why I'm independent. Okay. So now you ask, what do I do on a day-to-day basis? And there's kind of two sides of my business, me as a financial planner, me as a business owner. Because as a business owner is running the businesses, the organizational structures, team meetings, it's individual and group meetings, it's education to my advisors and staff. That's more the business side that most planners, I would say, don't get into because they're usually working again with a bigger firm or bigger company, or they're part of a solo practice where they are the one and only person.
Sure.
So let's just get into what financial planning is. Financial planning on a day-to-day basis is having conversation with clients to figure out what their goals are, what they're afraid of, what their benefits have been, and then how do we get there? And how do we do it on a consistent basis? Because markets change, life changes, economy changes. So it's an ever evolving thing. Once we do it once, it's never done. So I'm on the phone with my clients almost on a daily basis. I'm sitting down having meetings with them on a semi-annual, annual basis, kind of depending on the relationship. And then, just touching base with them, what's going on. There's a lot going on in the market right now. As we sit here today, the conversation of concern is the whole debt ceiling, right? So I'm working on ways of letting my clients know, like just some sound bites of here's some things to think about and why we shouldn't be as worried as media may or may not make it out to be.
Right. Yeah, I think it's that right there is similar to what we deal with on the real estate side, right? On the real estate side, we're dealing with the rates are going through the roof.
My gosh.
Nobody can afford to buy homes anymore. Yet here we are sitting in Colorado, running into multiple offer situations every single weekend, week out. And it's again, the media that's just kind of like scaremongering, like, oh, this is the end of the end.
Yep.
And our job is really to calm that notion.
Absolutely.
And say like, hey, here's the reality. Here's what it actually looks like when you're in the trenches and when you understand what's going on. It's not that bad.
No, it really isn't.
So I think we probably have similar conversations.
Absolutely.
And obviously your market and my market affect each other.
Absolutely.
Right. As the interest rates rise, the bond market changes, the stock market changes.
Mm-hmm.
And obviously maybe the way that you're advising people to allocate or what they should be doing, that all moves together.
Yep, absolutely.
So,
yeah. I mean, you were mentioning this, a lot of the stuff too here is like what we do as financial planners is really remove the emotion from decisions that happen on a day-to-day basis. Like you're not making a decision to invest money every single day, right? But your emotion has the ability to affect your continuous contributions or your continuous track of your allocations. Your emotional state happens to do that. Real estate's the same way, right?
Yep.
I can go buy a house right now, but I just heard that it's not good to do it because interest rates are around 7% and that's high. But if we remove recency bias from the situation, 7% is really good if we look back on history, right?
Yep.
It's still inexpensive money at 7, right? We're not the 80s where it was 12 18, 22% for a mortgage interest.
Right.
We just happen to live in this purgatory of free money for extended periods of time. So what you're doing is removing the emotion from the conversation of buying a house or selling a house. Because now that's like, I say it's really emotional what I do. You live in a very tight space of emotion, right? You buy and sell a house a couple times in a lifetime.
Yep.
But it's very emotional when you're in that time. So you're doing the exact same thing.
Yeah. And I think like, again, that emotional piece that we see, and you see the emotion peek through, by the way, like if you're in the real estate market, what you see is, and a great example of it was really in early 2022 and really summer of 2021, the amount that people were quote unquote overpaying for houses at the time, that's 100% driven by emotion and nothing else, right? Because what you don't see in those markets is investors going, oh, I'll give you 50 more or 100 more or 200 more. Like, that doesn't happen because the investors remove all emotion from it, from the transaction. Where in the first time home buyer or even just the move up buyer, there's so much emotion involved where we see this, we see prices get driven up, and you see it. I just had a listing very recently where we had one single offer in opening weekend, and it was for list price, and we actually didn't come to terms on it. And so just because, not price, but because of terms, so we ended up going another week on the market. Sure. And generally speaking, when people see that, they're like, oh, maybe I can get a discount on it. Maybe I can get it for cheaper. Well, what ended up happening was 10, 11 days into it, we ended up with 3 offers, and we sold it for $20,000 more than list price 10 days in. And the reason we sold it for $20,000 more than list price wasn't because somebody came in and wanted to pay $20,000 more than list price. It's because we had 3 people that wanted it. So once you have 3 people that wanted it, now the emotion gets involved.
Absolutely.
Who wants it more than the other person? And it's a really interesting thing. And that's honestly cheap by the last couple of years standards. I mean, we saw homes going hundreds of thousands of dollars above
same day of list.
Same day of list. Exactly. So the emotional piece is definitely something that we see. And like you said, I think some people that are, I don't know what your thought is on this, and maybe you have some input on this, but like I always tell people, especially like in their portfolio, right? Especially long-term stuff, their IRAs, their 401ks, like don't open that thing up and look at it every day.
No, definitely not. Definitely not.
Like, because there's no reason for you to have emotion on something like that, especially a long-term investment where you're not touching it for 20, 30 years anyway. But opening it creates the emotion that you don't need and that you can't do anything about anyway, and that you shouldn't be doing
anything about. That's the key. It's a shouldn't.
Like, you can't be. And I actually just had an episode. I think it was either the last episode or the episode before that talked about the kind of famous Warren Buffett bet, versus, the passive versus kind of aggressive or active investing, and how he won by an absolute landslide. In fact, they called it early and called off the, well, they didn't call off the bet. They paid out the charity. But 10 years of investing passive versus active, and the S&P 500 crushed these advisors that were moving money around like crazy, charging 2%. It just, and so that was a really interesting thing. And Warren Buffett he's considered the king of investing.
Without question.
He's the absolute, he's the best. And he wholeheartedly believes in passive investing, right? Like, don't open your account every day. Don't make emotional decisions based on what things are doing on a day-to-day basis. So I think that's one of the really important sides of the financial planning piece. And again, correct me if I'm wrong, but it's like, whatever the decision may be, whether it's buying a house or buying a car or, having kids or whatever, like, have somebody, maybe it's a third party, that removes the emotion from the process and says, is this smart? And sometimes you get some reassurance. Sometimes that financial planner can sit down and go, hey, spend some money.
Like, without question.
Go out and enjoy.
And what's funny in our industry, we are trained so much to save. Like that's what we do for a lot of our lives. And then you hit retirement. Retirement is now spend. And there's times that you have to be very diligent about what you're spending, how much you're spending, where it's coming from. But if we've done a good enough job, most of our clients get in a situation like you need to spend more money. And it's that mental mind shift change going from saving plus trying to live on an income that's generated by the work that you do and having the amount that you save and the amount you spend and coming up with what that is, budget, cash flow, right?
Yep.
To now I create my own income, but it's coming from my savings. That mental mind shift is really, really tough for clients to do. So that's one of the big areas we do help with.
That's interesting. And it's funny because one of the things that I always think about, I was a huge saver, like forever. I was like 12 years old, saving for a car already, like things like that, right? But so I've had this save mentality, save mentality. And one of my fears from a financial standpoint is I'm going to be 60 wishing I spent more money when I was 40.
Yep.
Right? Like that's one of my biggest fears is that I'm going to do all this saving. And then I go, man, I should have enjoyed life when my kids were younger, or I should have enjoyed life while I was in better physical shape or whatever it may be. I could have been better and I didn't need to put all this money away because now I've got more than I need.
Sure.
And so I think one of the things that I've found like through financial planning is just somebody to almost sometimes even give you permission.
Correct.
And go like, look, I appreciate what you're doing. I love the saving mentality that you have. But give yourself a little bit of credit and go spend some money, go on vacation, go have some fun, go buy that new car. Like whatever it is.
Yeah. So I'm glad you brought that up too, because we do that way more often than we think we do. Like it's not something that comes to the top of mind because usually we're trying to train and help people get to that place. But I have that conversation, I think, more so than I even think about. As you said it, I literally thought of probably the last 6 or 7 meetings that I had with clients that are still in the accumulation phase, but we're still 10 years out from retirement. But we have that literally same sort of thing. But how we do it is, okay, so we find out what your goals are. We find out what your concerns are. You find out where you're really, really worried, what keeps you up at night. And we know what it takes to get to our goals. And if we set that in place to happen every single month, every single year, and there's still money left over, that's exactly where I say, you know what? I don't care what you do with this money. You know exactly what it is. We have everything else taken care of. If nothing else happens, you have all this already done. Your retirement's done. Your kids are done. Your emergency fund's done. Your paying off your house early is done. You're getting that next car is done. Your taxes are paid for. What else do you need to worry about?
Right.
This is free spending without guilt money.
Right.
Go do it. And so back to what we do as financial planners, that's it. That is it. So I've come up with this formula that I created to help illustrate. If we had a whiteboard, I'd draw it out for you. But financial planning, so it's as an equation, financial planning equals wealth management plus advanced planning plus relationship management. Okay. So if I break down those 3 areas, wealth management is actually the physical managing of the money. Where is it allocated? Who's managing it? What investments are we picking? And how much is being contributed or withdrawn from it? Anybody can do that. At the end of the day, anybody can do that. You can do it on Betterment. You can do it on Fidelity. You can do it at Vanguard. You can go to Advisor. It doesn't matter. We all do the exact same thing there. Warren Buffett's passive investing, right? Overall, passive investing is going to be more efficient in the long run than active. The difference in there, that's assuming there's no emotion involved in it. That's 100% the difference.
Sure.
Most people can't handle that, so we have to work out what's your appropriate allocation. But again, anybody can do that. This is just commodity, right?
Right.
The difference what financial planners do, they take it that next step of what I said, advanced planning. What's advanced planning? Tax mitigation, tax preparation, estate planning, protection planning. What happens if something happens to you? How are your kids taken care of? How does that get passed on?
Right.
Like those are the conversations that we have and put in place for our clients. We don't there's not something we give. There's not something that's on a piece of paper you can see, but it's the conversations that make you very, very efficient as an individual from a financial standpoint. But the bigger one is the last one, relationship management, right? Conversations you and I have go a very, very long ways in the decisions that I help you make on an annual basis of what you do with your money. Or more importantly, my thing is what I do is those couple things that are good and decisions we make along the way that push it forward, those are okay. What I really do is make sure you don't make that one big mistake that usually can show up every 5 to 10 years. What is that? I don't know. When is it going to happen? I don't know. But every single client of mine, there's been a period of time they called up with a question or concern of wanting to do something. And I strongly recommended against it. And we walked through that conversation and got to a better place where they are okay with not making whatever that decision was. And they look back and go, I'm so happy I didn't do that.
Sure.
If we do that right, and you don't make that one big mistake, you will be 100% better in your financial position any given time.
Sure.
So the relationship management is a huge part of it. But relationship always comes to your CPA and your estate planner, your insurance agent, your realtor. We have conversations with all of our clients' professional networks on purpose because we need to know you too.
Right.
Because now we know our client, we can work together to make sure the client's getting the right place, because now we probably know and can pick up a little bit of that emotional side and relay that to the other party. And it's not a negative thing. It's actually a beneficial thing. Hey, by the way, Joe, he's really worried about this piece. He may or may not have ever mentioned that to you. It might help you in getting them to the right place,
right?
Whatever that is, right?
Yeah.
So when we all work together, we get all of our clients in a better place.
Yeah, it's the idea of building a team, right?
Mm-hmm.
So having a team of people that like work cohesively to get you where you want to be, right?
On your behalf.
That's right. So
without question.
It's your, and they all, I think most of them abide by some sort of fiduciary, right?
Correct.
And so like the idea is if they're all working together, you have a financial planner that works with your tax preparer, your tax, not a tax preparer, but
CPA,
but it's somebody who's a tax planner.
Mm-hmm.
So you have your financial advisor, a financial planner, you have a tax planner, maybe you have an attorney involved in it with, if it's trusts or that type of stuff. And you may have somebody that's doing real estate for you. You may have just any of those other professions, and when they're working together, that's why you see like high net worth individuals. They have teams of people that do this collectively, and sometimes really ultra high net worth individuals will have multiples of each to keep them in check, right? And so when you hear like stories in the news of somebody, one of Donald Trump's 20 lawyers.
Right.
When you have such a high level of net worth, you have to have that many people. And not just because you have so much stuff going on, but because you really have to have those people to keep the other people in check. Because it is so easy to take advantage of a person like that. And unfortunately, there's always a bad apple in the bunch, right?
Yeah.
And so that's why they'll have 4 or 5 financial planners, or they'll have, a bunch of tax preparers, and somebody will look in and go,
something's not making sense here.
This doesn't make any sense. And they'll be okay to kind of ring the bell and be like, this isn't working. So one of the things I wanted to chat about was just kind of like, I think there's just an overall perception with financial planning or a financial advisor that like only rich people have financial planners, or only rich people have financial advisors. Like, or I don't have any money for them to manage. And I think that's like not well founded, right? Because I think there's so much other value that's there. So can you speak to that a little bit? Like if you met with somebody that's like, I'm not a millionaire, so I just never thought I needed a financial advisor before. Like, how do you talk about that?
Sure. Yeah, that's a great one. I actually love this piece of the conversation, because the perception of the past is those walls are just getting destroyed lately by financial planners. So a really good place for people to find information out is a certified financial planner. CFP.net is their actual website. It's its own regulatory board. You have to pass certain exams and criteria to become a CFP. It's kind of like the CPA designation for accountants. Same sort of thing, right? But with that designation coming up, we've created a new wave of financial planners that are beating down those walls. You have to have money to invest. You have to have a lot of money to invest for me to work with somebody. Now, there's a ton of planners and advisors that still work under that. You have minimums to meet, stuff like that. That's fine, but there's a pile of new planners out there that are not that way. So if you're just getting started, a financial planner is going to help you a ton to create your cash flow plan. So cash flow is an easier way of saying budget, right? Budget's not fun. Cash flow is a little bit easier because we're showing you how to spend your money, not spend your money. Like those are two different mental perspectives, and that's what we want to help. So we can do that. Also, life insurance. you need life insurance if you have somebody else relying on your income. That's an easy way to work with a financial planner, right? Taxes. What do I do with my employee benefits? How does that work? None of this involves investing any money at all, but it's going to help you get to a place of where you can invest money sooner than later.
Sure.
And get you through. Unfortunately, most people coming out of college have student debt, have credit card debt. The credit card companies are amazing at capturing college students and getting them to spend a pile of money on a credit card that they didn't have because nobody taught them. We help fix that problem, right?
Right.
So if we can get you through it where you're now, instead of you graduate or you're in your early 30s starting your career and your family, versus starting at 40, if we can get you started at 25 or 30 and get you through that and done by 35, you now have added 10 to 15 years of saving on top of your life. And that compounds massively, right? So the way that's done is we can charge a monthly subscription. We can charge a one-time fee. We can charge a retainer. So that doesn't involve with actually giving us any money to invest at all. Strictly just advice.
Right.
And there's a ton of planners out there now that it's called fee only. They only charge a fee. They don't do any investment management at all.
Got it.
And there's a wonderful place to start there. So you always need something before you think you do.
Right.
That's the old adage, hire before you need it. Bring on more staff before you think so.
That's right.
Add on before you need to. Like all those things. In the financial industry, it's very scary. It's a kind of a taboo topic, but we got to make it not.
Right.
If you make it not, then you're going to be in a really good place, and it's no longer a problem.
And I think if you go back, and I think it's like episode 8 or 9 of this podcast. It's with Verl Workman, but the episode is basically about like not reinventing the wheel. Like somebody has already done whatever you're trying to do or whatever you want to do. Somebody out there has already done it and has done it very well. Mm-hmm. And it's this idea behind like you can spend tons of time and put tons of effort and stress and potentially money into figuring out how to do something on your own.
Yep.
Or you can just hire a professional to help you do it the right way the first time. Very quickly, because it's second nature to them, right? So when you sit down, when you come out of college, for example, and I had to laugh a little bit about your college comment about the credit card companies being very good at getting college kids. I'll never forget. But now it wasn't my first credit card because my parents did a really good job. They got me a credit card when I was 18 and said, you use this for gas and emergencies only, and you pay it off every month, right? And so, but when I went to college, they had a Citibank had a table on campus doing credit card applications. And if you did a credit card application, you got approved for it. You got a free shirt that said college on it, which was from Animal House, right? They wore those shirts that just said college. And I thought it was the funniest thing. I was like, that's awesome. It's just like a shirt that says college on it. It's awesome. And it's like one of my favorite shirts forever. So I got a shirt and I got a credit card. And it's really funny because I remember very vividly like putting incorrect information on the credit card application form. Yet somehow I ended up with a credit card.
Still got it.
And I never used it, but I had it like for years and years and years. And then the credit card that I did use went away from cash back and went to points. And I was like, I don't want points. I want cash back. Well, the Citi credit card had cash back. So I had this thing for probably 6-7 years.
Without ever using it.
Never used it. And then I started using it.
From college.
Because it gave me cash back. Yeah. And so I probably used that thing for 5-6 years before I went on to some other stuff and got rid of that card. But I mean, you're exactly right. But coming out of college with debt, with credit card debt, with student loans, maybe getting into your first job that's well paying. Yep. Maybe they have a health savings account. They've got a 401k. Go in and talk to a financial advisor.
Yes.
Like pay the money to go in and talk to a financial advisor and go, what should I be doing with all this?
What does this mean even?
Right.
Like, just tell me what this even, I don't even know what this means. Why is there so many letters and numbers put together?
Right.
Like 401k, 457, HSA, FSA. Like, can you just like give me some foundation? What does this even like remotely mean?
That's right.
And so to your point, the barrier of entry is really small. And so like for our listeners here today, it's like, we're talking like $100 a month, maybe $150 a month. It kind of depends on the individual you're working with as a planner. But again, it's a very, very low cost entry. And if it's something that you don't need an ongoing, conversation with, all right, $200 for a 1 hour, 2 hour conversation with an advisor who's going to teach you exactly what that is and then say, do this.
Yeah.
You just walked out of there having everything done and you didn't have to think about it.
For a couple of $100 that you didn't have to research on your own. You didn't have to go look online, try to figure out what's good information and what's bad.
Wrong or right on this one.
Right. And leaving with even just one singular nugget that you go, holy smokes, I didn't know you could do that. Like I remember when I learned that this was crazy to me, that you could have an HSA account. It's investable.
Yep.
You don't have to take any. You can literally save your receipts, your medical receipts, for the next 20 years.
Mm-hmm.
I think 20 years is the limit, and maybe you know it, but I think it's 20 years. And then at 20 years, you've let that account build up, get interest because you can invest it in the stock market.
Yep.
And then you can reimburse yourself 20 years from now for all the receipts that you saved for the past 20 years. Really, you have a 20-year period, so you can just reinvest your receipt, or you can just pay yourself back from receipts from 20 years ago, and then the next year 20 years, and but you can save all this stuff. So like you're going to be paying for it one way or another.
Yep.
So you might as well let it grow tax free.
Right.
Like if you just got that information for $200, you'd be like, I mean, I'm giving it to you for free right now, but like on a higher level.
Absolutely. But that's the same sort of thing.
To teach you how to do this.
Yeah. So I don't know about the 20-year thing, but the concept of that though is the money, like HSA. Here's some free advice. Again, HSA, it goes in pre-tax.
Right.
You don't pay tax on that dollar. It's truly a dollar goes in, was a dollar. And then it grows tax-free.
Right.
But it comes out tax-free.
Right.
That's the only vehicle out there that you have pre-tax on the front side and tax-free on the back side.
Right.
All the other vehicles, if it's pre-tax on the front, it's tax on the back.
Right.
If it's tax-free, it's tax on the front, no tax. But not one other vehicle out there.
Right.
100%
tax-free. Right.
Amazing.
Not tax deferred.
Not tax deferred.
Tax-free.
Tax-free. And then once you get past 65, you can use the dollars as you wish, kind of like an IRA.
Right. That's what I mean. It's crazy. So like, and like I said, that you don't have to reimburse yourself. I'm almost certain it's 20 years, but you don't have to reimburse yourself right away. Mm-hmm. So you just keep your receipts. Like if you're good and organized, I'm not. So, but like if you're organized, like, and you have $1,000, medical bill, like pay it, not out of your HSA, but pay it and then keep the receipt. And then down the road, that $1,000 that you invested in HSA 20 years from now will be worth $3-4 grand.
Yeah, be a lot bigger.
And now you take out $1,000 to reimburse yourself, and you still have $2,000-3,000 left in the account. So there's some really powerful stuff, and it's like, okay, just go get yourself educated on it. And like you said, a couple $100 to learn some incredibly powerful financial tools. And one thing that I think we'll both agree on is, I think by far, we as a country failed the American public on finances. Financial education
without question.
On more than anything else.
Yeah.
Like it's crazy to me that people came out, and I talked about a statistic in an earlier podcast about what percentage of both teachers and students said that through K through 12 education that they receive some sort of financial literacy. And if I remember correctly, it's under 30%.
Yes. Yeah.
And so it's crazy to me to think that 7 in 10 people leave high school 18 years old and don't have a single piece of knowledge regarding financial literacy.
It's crazy.
It's really sad. And so when you think about that, you could go get that financial literacy for maybe a couple of $100, or for an ongoing, $100 a month, $150 a month. You can really understand, and you may think about this. You may go like, I don't have an extra $100 a month. I don't have an extra $150 a month. And I get that, but I bet a meeting with a financial planner, you will find it
without question.
Like
every single time.
I think I think you can. I mean, I think anybody can find an extra $100 a month. And you may not love it. You may have to give up your Starbucks or something like that. But
most of the time you're doing it through tax savings too. So we probably increase your pay just because of some of the conversations. So it's usually very, very minor change in spending to get you to a better place.
Yeah.
But to kind of go on the other side of the coin here, talking about, not having assets to manage. The other side of a lot of people we work with, and it more affects the clientele you work with, is people who have all their assets tied up in real estate and or their business. Neither of them have really assets to invest. So in theory, and the history is, I can't use a financial advisor because I have no assets to work with them on.
Right.
Wrong. I have a lot of clients that are on a fee-only arrangement where it's kind of a what do you call it? Retainer. There it is. That's what it is, for a retainer. So they have access to give me a call and have meetings with me regarding their situation. That's about buying another property, about business management, about business decisions that make a difference in their net worth. Because if it goes wrong, their net worth is negatively impacted.
Right.
So as a financial planner, what I do is that side too. Like, again, so we're breaking down that wall of assets to manage, or I have to invest money. You don't have to. So you have the one side here, just getting going. There is literally no net worth yet, but you're getting there. Then we have the other side. We have a really big net worth, but there's nothing investable. Both of those used to not have access really to somebody to talk to. Now you do. Yeah. I highly recommend calling. Like the clients that call me that are on the right side, where they're, businesses or real estate, the conversations we have that are just different than what their CPA has or their estate planner has, it is just to open their mind to some different pieces. Like, well, have you thought about it this way? And it's not we're going to change exactly what they're doing, but we're just going to make them make better educated decisions.
Yeah. Okay.
Which is huge.
Yeah. The last thing I wanted to cover regarding just kind of just overall, some of the maybe misconceptions that we see with financial planners, or at least some of the ones that I see just because of the realm that I'm in. One of the things that I hear a lot, and I'm wondering where this comes from, is something maybe you can shed some light or give some insight on, but I hear a lot when I'm working with a client, maybe somebody that's a higher net worth individual or somebody who has investable assets. I build models. I build financial models because of, again, my financial, my interest in finances. What I do is probably similar to what you do, which is like, hey, when do you want to retire, and how much money you want to have when you retire, and you work backwards and you figure out, what do we have to start with, right? Yep. So I do the same thing, but I just do it with real estate, right? So I go, hey, what do you want to retire? How much money do you want to make? How much do you need in cash flow? What do you want your net worth to be? That type of stuff. And then we work backwards, and I build a model based on that, but I use real estate to do it. Okay. So one thing that I've heard, a common objection that I get with some people, is my financial planner, my financial advisor advises me against investing in real estate. This is a real estate podcast. And so, I'm that it is, and obviously I'm a real estate investor. I think that's like shenanigans when I hear that. I'm like, what? Like who says that? Like why? So why does that happen? And tell me, is there value to that? And obviously we know there's pros and cons of it. And I 100%, I have stated very clearly on this podcast before, and all of my clients, that if you're looking to use your money in a certain period of time, real estate is not for you.
Bingo. Yeah.
Right. Sure. Like if you were like, Nick, I want to invest, but I got to pay my college kids fund, my kids' college fund in 3 years, and be like, ooh, nah, don't do real estate. And you're probably going to tell them something very similar, which is, let's not invest in volatile stocks.
Exact same thing. Yep.
Right.
Exact same recommendation.
I'm going to say, hey, it's maybe a bond is great for you. Maybe a 3-year CD is great for you, something like that. Right. But I'd love to know where that feedback is, because I'd almost love to sit down with that financial advisor and be like, maybe you need some financial education to the benefits of real estate. Yes. But where does that come from?
So I think from a very blanket statement here across the board, most financial planners don't have a lot of knowledge on real estate, and in turn don't have enough information to give proper advice on yes or no, but in general it's going to be no. And again, this is a very strong blanket statement.
Sure, of course.
I don't get paid on real estate assets. That's pulling money from me to be able to invest on behalf of my clients and create a revenue stream for myself, right? So part of it's that. I would say a bigger part of it is more of just the ignorance of not understanding of how to do it.
Okay.
Now there is, I would say, a big part of the population, your average American, average income, average household, probably should think twice about getting into real estate until they have their emergency fund in place, they have retirement taken care of, they have their college savings taken care of. Like, once we get through that and then we have discretionary cash, to me, that's when it shows up.
Agreed.
Well, the problem is a lot of advisors get to that point and now it's save more money. We just save more, right? And they're afraid to talk about the real estate side of it. And I'm assuming the people you're working with have all that already done and they still have that discretionary cash flow that they want to do something different with.
Yeah.
That's where it should be brought up as part of the conversation. Should it be 100% of their savings? No.
Yep.
But should it be zero? No.
Right. Right.
Like, real estate's another investment asset class. You have stocks, you have bonds, you have real estate. I mean, there's some other ones out there I'm not going to get into because I don't actually like doing much with those.
Sure.
But those three are your main three investment asset classes,
of
right?
course. Yeah.
You need to be doing something with them. Now, is it done by owning the property? Is it done through maybe real estate investment trusts? Is it done through private placements? It depends on your situation, your net worth and whatnot. But usually once you get past that point and you're there, you should have conversations about real estate and then be educated on to make the decision whether it's right or wrong for you. The problem is a lot of people see, and people, I'm throwing the investors out there, see real estate as very, very sexy. It's always been promoted as kind of like a sexy investment. That's kind of the next thing you do, right? And so some get pushed into it too quick without knowing all the information because they're not working with somebody like you who actually is like, all right, let's actually build a plan of how you're going to get there, not let's go buy a property.
Right.
Because those are two separate things.
Way different. Way different.
And the average person is on side number one. I want to buy a property. They go talk to their friend who's in real estate because as an individual, I could probably name off 6 people off the top of my head who are my friends and close networks that are realtors.
Yep.
Right? Everybody has one. Brother, brother-in-law, uncle, sister-in-law, next door neighbor's spouse. I mean, you know a lot of people, right?
Yep.
Now, do they specialize in investment real estate? Probably not.
Right.
So now coming back to the client sitting in front of me saying, hey, I want to do investment real estate. Usually us as advisors automatically go to, oh, you're talking to your sister who sells real estate, who wants a commission, right?
Yep.
Not actually the information of investment real estate.
Right.
I think there's 2 separate things there.
Yeah.
And like when I have my clients come to me with a plan, I have had this. And I'm like, I like that. You should do that.
Yeah.
How can we make that happen as part of your portfolio in your plan? Because it's a really, really good one.
Right.
Because you've thought about it. And then I might throw in a few things, questions or concerns or things to think about. I may give their real estate professional a call and say, hey, I see this. I hear you. Here's a piece that they forgot to tell you.
Yeah.
How can we work that piece in there?
Yep. Completely
different conversation. So if you're an investor and you have one of the advisors that are generally a no, like if you have also a real estate professionals putting a plan together, introduce them. Usually that's going to go better.
That's a great idea. That's a great thought. I never even really thought about that before, but it's like, yeah, hey, like if let's say I'm working with a client that is like, well, my financial planner is saying, I'd be like, can I talk to them?
Yeah.
Can we have a meeting with them together?
Yeah, absolutely.
I never really thought about that avenue, but if they're working with a good financial planner, they're going to say yes. The planners would be like, heck yeah, bring them in. Well, let's talk about it.
Like in general, as planners, talking about that team approach, that relationship management, that's exactly what I'm talking about.
Yeah.
And here's a red flag for people. If you have an advisor, usually it falls in that advisor category, planner. I use those terms kind of interchangeably, even though they're really not. But it's hard for the consumer to understand the difference. And so I just keep them together. But a big difference is if you're working with an advisor, you bring this up, they're saying no. You say, hey, can I bring Nick into this conversation? And that advisor is like, no, I'm not going to have that conversation.
That's a red flag.
That's a massive red flag.
Yeah.
Okay, we should probably talk about finding somebody new, right? Like you want somebody who's on your side, who's on your page to help you get better.
Right.
Like, irrelevant of what Nick's saying, irrelevant of what I'm saying. If we're not trying to get you to a better place, you should fire us. Like that. It's period, end of story.
And it's interesting what you said about because I never really thought about this either, but the financial advisor sitting there thinking, yeah, your sister, your brother, your cousin, whatever wants to make a commission. I never thought about it like that, but I can see that. And the reason why, one of the things I always tell people, I said, you want to know the difference between somebody who specializes in investment real estate and just a normal real estate agent? So take your sister, your brother, whatever, some other real estate agent that you know, and send them a property on Zillow and say, I want to buy this as an investment property, and see what they say. If they say, sounds great, let's go see it and I'll write up the contract or whatever, you're with the wrong person.
Absolutely.
Because if you send it to me, 9 times out of 10, I'm going to send back, hey, that's awesome. I'm glad you're looking to invest. Can we talk about what you're looking to do?
Yes.
And can I send you 10 other properties that would be a better fit than this one?
Right.
That's the difference, right? Because any property can be an investment. Any property can be a rental property. It doesn't make it a good one.
It does not make it a good one. Exactly right.
And so that's the biggest problem that we have, is when I hear people like they go, hey, this house down the street went up for sale and I want to buy it as a rental. And I go, well, where do you live? And I go, that's a terrible place to own a rental property.
They don't want
You're in a beautiful neighborhood. That's not a great rental area. Like, if you want to rent, if you want to buy a rental property, I'd love to have that conversation with you. And can we talk about your financial model and your financial plan and where you're trying to get with it and what you're trying to achieve? Because I'll tell you how many times those people go, well, I'm just trying to create some, get some extra cash flow.
Income stream.
And I go, that's not happening here in Colorado. If that's what you want, if you want cash flow, you got to get out of Colorado.
You got to go buy a different state.
So let's really figure out what you want first. And then when they go, well, if there's no cash flow in Colorado, why are investors buying in Colorado? Well, I'll tell you why. Because they're not looking for cash flow. They're looking for wealth building, and they're looking for appreciation, right? If that's what you want, if you're looking to build massive amounts of wealth, let's buy Colorado. If you're looking for cash flow, let's buy Kansas.
Right.
You know what I mean?
Absolutely.
So like having those high level conversations with people versus, like I said, I bet you send a message to 10 real estate agents, just randomly pick them out, say, I want to buy this house as a rental property.
Sounds great.
They'll be like, sounds great. When do you want to see it?
Yeah, when do you want to see it?
I'm going to tell you, I love that about you.
Yep.
Thanks for reaching out. Can we have a conversation first?
Yep, absolutely.
Because I don't think this is going to be a good fit. Yep. Like I said, maybe you get lucky and I go, that's going to be a good rental. But we'll still going to have the conversation, right?
I mean, it's funny you mentioned that. Financial plan is the same side. If I have a client come to me and say, hey, I want to buy this investment. My first thing is, all right, why? What's it look like? What's the background of it? What's the time frame? Where does it fit into your goals? Which goal does it fit into? It's not yes.
Right.
And it's not that we're saying no. We just want to make sure it works. That's it. Literally, it's all it is. It's like, I want to make sure it fits what you're trying to accomplish. Where you're asking that same question, it's not no, but it's like, but why? Tell me more about what you're looking to accomplish. And does this actually fit what you think so? Because unfortunately, as you get in, and especially in the real estate investment side, like you're looking at houses like I would want to live in. Right. That's not always the best place to buy.
Generally not.
Right. It's generally not. Right? And then you go like, well, I would never live there. That's probably, you're now probably in the general vicinity of where you want to start buying.
That's right.
Right?
You have to remove your rose-colored glasses.
Bingo.
If you are going to be an investor, because you are not going to, if you have enough investable money, you probably live in a nice home that's not rental grade. And so when you go look at a rental property and you go, there's no way somebody's going to pay $3,000 a month to live here because my mortgage is $2,200 a month because I bought this home 10 years ago and now it's worth over $1 million. And they go, I live in $1 million property for $2,200 a month. There's no way somebody's paying $3,000 to live in this townhome. And I go, take off the glasses.
Absolutely.
You're out of touch.
Right. And that's the hard part with getting into real estate. Like that emotion, go back to that. It's all emotion driven initially. But if you get into real estate investing, you have to have the emotion 100% removed from the conversation, or else you're going to end up making a horrible decision. And I think you probably do a lot of that too for your clients. You're helping them make that one big mistake not happen.
Right.
And that's usually either not buying something because it's a horrible idea, or two, not selling something because it's a horrible idea right now. Like those are usually two of the situations that you're in.
Sure.
Right? But
or not taking action,
or you do nothing. That's another thing.
Sometimes that's the worst thing. I mean,
you haven't raised rent in 6 years.
Oh, it's the landlord trap.
Right.
We have an episode about that.
Right. Or you haven't touched up, cleaned, replaced the carpet with $500 grade carpet.
Yeah.
And how many, like,
Or
just throw some money at it.
Or
It
just
doesn't cost
first-time
that
home
much.
buyers that have been on the fence for 5 years.
Because they can't make a decision quick enough.
And I'm like, hey,
This is literally,
you wanted to buy in 2018. Now look at it.
Yep. By the way, it's not going to ever go down.
It's not getting worse.
Substantially.
Yeah. So
Rates aren't getting substantially better. I mean,
Right.
I think we'll have some of that. But there's just so many different areas of this. The conversation, the person you're working with make a big difference in how you're going to experience financial planning or real estate.
Yeah.
I think the experience is so big to making it positive or negative.
Yeah.
And information. So, yeah.
Well, cool, man. Well, I appreciate all the insight and information, and we're going to have if you want to learn more about Clayton and his business, we'll have all of his information in the show notes. So check out the comments below, and if you have questions on his side, feel free to call his team and
Absolutely.
reach out to them. And as always, with me, let me know if you have questions on real estate and how you want to build your that side of the investment, the plan. So, so anyway, appreciate everybody tuning in. Remember, come in next week. Check us out on our next episode as well. And until then, live big.
Thanks for joining us for this episode of the Live Big podcast. For even more real estate and investment resources, go to blackyetigroup.com/resources. and download Nick's complete guide to running your own rental properties. Tune back in next week for another episode, and until then, live big.
Live Big does not provide investment, legal, or tax advice, and nothing herein should be construed as being financial, legal, tax, or other advice. Live Big does not represent that any securities or services discussed are suitable for any investor. No investment or other decision should be made solely based on the contents or information found on the website or podcast. When making a decision about your investments, you should seek the advice of a professional financial advisor or qualified expert.